Okay, let's get into the stock market technical analysis. It is Fed day. So we've got the Fed coming out here in a couple hours, going to announce their rate cut. It's pretty much priced into the market. But one thing I want to point out, and we'll just get right into it. Guys, drop me a thumbs up as you're finding value in the content. And feel free to join in the private member group. I'm posting additional market trades, trade insights, trade setups, and charts in that private member group. Link in the description below on that one. The CME group, the Fed Watch tool here, this is really watching the Fed Fund futures. And right now we've got actually a 55% chance that we're going to see a 0.5% rate cut. And then we've got a 45% chance that we're going to see a 0.25% rate cut. That's pretty close in general. I mean, typically when it comes to Fed day, usually you've got a really high percentage of something locked in by the time we get to Fed day. And today, I'm seeing this almost like a coin flip. So there should be some market movement happening, because to me it looks like the market doesn't know exactly what to price in. Now, a rate cut is for sure priced in. I mean, it's the only thing that is priced in. So 25 basis points or 50. I'm leaning, honestly, towards the 25 basis point cut. Now, I know the Fed Fund Futures doesn't have that priced in as high a probability, but a 25 basis point cut would be more consistent with how the Fed actually reacts. Typically, you don't see 0.5% rate cuts from the Fed unless it's emergency measures, things like that. And typically, when they start to move, they start with quarter-point rate increments. So that's the way I'm leaning, is a quarter-point cut. And I do think, because as of right now, the market's anticipating, at least by the Fed Fund Futures, by a slight margin, they're anticipating a 0.5% rate cut. If the Fed only goes 25 basis points, I think the market could sell off on that, because it's expecting a half, although not by much, and it wants rate cuts. The quarter point might not give the market what it wants. So I don't know. That's just kind of what the read that I'm seeing. Let's jump into the charts. Here's the triple Qs. You can see here we basically have, let me grab my tool. Okay, we basically have a downtrend line we're watching, and still below trend. We've been there all week for the most part, and some of last week. So the last few days we've been testing that trend line resistance. And that's it. We're at downtrend line resistance. A break above that, and we've got some potential resistance overhead right here, 45.55. And that is also a bearish engulfing. So, I mean, ultimately, I really wouldn't want to see triple Qs go much beyond that. Could go up and fill the gap. There is a slight gap right there on the daily chart. But you start to head up towards that direction. The all-time highs are not too far overhead, and you're very likely going to go test and most likely pop those all-time highs, at least on an intraday basis. So we could, if we start to break out from this downtrend line, I think that, anything above this 45.55, and I do think it's probably going to go put in some new all-time highs. So keep an eye on that, but as of right now, we are still at downtrend line, and this is holding, so it's at resistance, and you want to short at resistance. Now, for me personally, I'll probably lighten up into the Fed, because you're almost guaranteed to have a lot of whipsaws and volatility that can get pretty crazy. So it doesn't seem to make sense to kind of ride that out. But what I'll likely kind of analyze how the market treats the Fed news, and then we'll see where we go from there. That's what I got on the triple Qs. If I go to the future, NASDAQ futures, same kind of look, right? You've got this resistance, and we're just holding there. So maybe it breaks out, maybe it doesn't. I mean, it's, you have a potential bull flag where it's been kind of ramping up and then flagging for the next few days. And if you run up, it could run up, and, this is signaling a push towards the all-time highs there on that bull flag. But until you see the impulsive break to the upside, then you don't have a bull flag, all right? So there's nothing to do there. The only objective trade as of right now is to be short at resistance, all right? And until you break out or see that objective breakout, then that's the only objective trade. The SPY here, S&P 500, what a mess I've got my chart in. This one, you basically have, testing of the highs yesterday, a slight overshoot and intraday high. But again, very high probability when you saw that intraday high that it was going to be a false move, because it's right ahead of the Fed. Nobody's going to be loading up major positions, large positions, just ahead of the Fed. At least the big money, that is the money that can move the market. So we're at, as of right now, kind of at double top. We also continue to have negative divergence. Even yesterday, the new high, there it is, boom. Negative divergence on the RSI and the PPO. So that's another divergent high. I think there's a good chance it gets sold into. We need to clear the Fed out of the way. The US dollar, all right, the dollar futures. You'll see here pretty much holding support. Let me kind of clean this up as I go. But you can see that we've got this trend line here, and we're pretty much holding it. There's not really bullish divergence, so we'll see. This one's not super telling on where things might go. There's a potential downtrend line to watch really right about there for a rally into resistance. But as of right now, this one is kind of just waiting. And gold, the gold futures continues to diverge lower. All right, we've got negative divergence on the momentum indicators, and we've continued to kind of push higher into the Fed, making new divergent highs. But again, it also is a bearish rising wedge. So I can easily see this, right after the Fed, they might pop it up, but it's really not what happens in the minutes after the Fed announcement. It's really, for the most part, what happens tomorrow is really more important. What does the market do? What do the big market makers and the big money come out after that kind of volatility event of today? And then what do they do with their positions? And that's a lot more telling. What the price action tomorrow is a lot more telling in terms of what's going to happen in the near future versus kind of what happens today at, here in a few hours after the initial algo pop or drop, basically. Nvidia, one of the most important stocks right now, just because it's really been the retail darling, and it's been also just kind of the AI bubble, basically the ground zero for that. Support, all right, we've got support. There's a support. There's support, and we're still above support. And that's it. It's as simple as that. We're above support. We're in an uptrend. And there is no indication of a sell signal on Nvidia right now. Now, this is we do have resistance overhead. You can see here it is. Resistance. And, so if they want to pop it up, that's resistance, okay? It's objective to short there at resistance, or it's objective to short on a break of support. Besides that, we don't have any real trade to be made. And this might just chop around today. It's a ways away for either support or resistance, so I don't know if it's going to actually get, if we're going to get any kind of signals on this today. NTR, this is what I'm looking for a potential long trade. You can see here on NTR, and again, this is I think they're agricultural chemical company, fertilizer. In general, you've got this clean downtrend line here where we have lots of reactions marked out to verify that as a downtrend line. We did have a breakout here, and it's been backtesting support ever since it broke out. Support, and also been putting in a bullish falling wedge. You can see the wedge right there. All right, so that's a bullish falling wedge. We have pretty big bullish divergence. Momentum's continued to build on this to the upside, positive momentum, while this has been putting in a bullish falling wedge. No real buy signal. We're at the apex of the wedge, so I think it's moving day basically soon, maybe today or tomorrow. And you can see right here, we're just slightly above the wedge. But again, it's right ahead of the Fed, so we can't trust that. We have to wait for the Fed to clear out, and then we'll see where this thing's, what this is doing. Because it could easily have a strong pullback, go test support again. There's lots that can happen. If we do get a buy signal, the widest part of the wedge is really right about there. And if we get the buy signal sometime soon, then that's the major target, pushes us up to, the major target's about 55. And we have some resistance levels overhead at 57.50. So somewhere right up in there would be the major target for this move. But I think it's very likely going to be really more of a sustained bullish move, because the high of this thing was put in back in April of 22. It had a big long downtrend line. And it's coming off of, to me, it looks like corrective action where you had a strong leg up, correction over a few years, and then a continuation of the next leg higher. So, we're just waiting for that buy signal. Once again, we got to get past this Fed day. And this one, Unity, this trade, from my perspective, is over. Could go more. I mean, it could bounce more. But here's what the trade, and I pointed out in the private member group, you had resistance, resistance, resistance. We had the breakout here. It chopped around for a little bit, but ultimately we started to really run right here. And we had bullish divergence the entire time right there. So once we started to get that big move up, or that big candle, it looked like it was starting to break out. I pointed it out to the private member group. And from there, even if you got it in the middle of the candle, which is about where I was able to grab it at, it did push all the way up to about 17% in the last just 5 days or so. So, I think it's time to take the money and run ahead of the Fed. The risk, we could push up to the 200-day. There's also resistance right here at 2173 in that area at least. But it's close enough, for a 5-day run right ahead of the Fed. Take the money and run. That's my perspective. So that's where I'm at on that one. I don't own any of this right now. This is also an interesting long setup for sure. Save, which is Spirit Airlines. You've got a bullish falling wedge. All right, you can see it. The wedge is really compressed. Bullish divergence on the momentum indicators. And we're looking for a buy signal starting to break out today. Well, yesterday and today, starting to kind of break out. Not super impulsive, but it is starting to break out. But once again, a breakout that occurs right ahead of a major event like the Fed day today just can't be trusted. Even if it is going to be the ultimate breakout and buy signal, it just, from my perspective, too high of risk to take it right ahead of the Fed. So better off to wait, see where this thing is sitting at after that. And if it does break out, you take the widest part of the wedge, which is, basically there. Measure that out, and it pushes us up for a move up to the 200-day moving average. All right, and it's about 559 or so. Okay, so that's that. Semiconductors, SOXX, same look as the triple Qs, sitting at resistance right there, and the 200-day moving average. So if the market doesn't like what the Fed has to say, then we're going to lose the 200-day moving averages on the semiconductors, and we're going to hold this downtrend line and push down to support. Support is down here. You can see several reactions there. There's the third. So support's somewhere down around 204-ish. And then obviously you got to break that support for a more major longer term sell signal. So that's something to watch for. And bonds, TLT, this is the long bond, which the Fed doesn't really control. They control the short end of the curve. And one thing I'm kind of noticing, there is slight negative divergence here, just barely there on the daily chart. So these are divergent highs. So, if this can continue and can extend, divergence doesn't mean it's going to just reverse. But if it does start to sell off and you see the long bond, the TLT, starting to sell down, that actually means interest rates will be rising, at least on the long end of the curve. And that is, that should be negative for the market. In general, that would tell me that the Fed basically cut 50 basis points and the market doesn't, at least the bond market doesn't like it because it's going to fear additional inflation. And so you could see people selling bonds, which means TLTs dropping and interest rates rising. I don't have I don't have any real large opinion on this, at least as of right now. Okay, so I wanted to get the video out before the Fed, but in general, I don't think it makes sense to just be loading up on any real positions right ahead of the Fed. I've started to lighten up on my Q shorts. I can always jump back in. But there's no sense in just holding that into the Fed. It's going to very likely be pretty whippy on both ends, up and down. So I think there's opportunity to really get kind of whipped out of stuff. And so I prefer personally to kind of lighten up on my risk, let the Fed come out and say what they're going to say. We'll figure out what the market actually, how they react to it, because it's not really what the Fed says, it's how the market actually reacts to it. So we're going to want to see how the market reacts to it, especially, tomorrow when the market opens up. What's the market do? Where's the big money go? Do we see any real major sell signals or any kind of big technicals that are changing tomorrow that helps us really understand what the big money's doing? That's kind of where my head's at. So I'll get the video out and I will catch you guys on the next one.